limited. Our next guest says the plan depends on mortgage servicers to voluntarily agree to modifications, and that's where we have the problem. Joining us now, John Taylor, president of the National Community Reinvestment Coalition. Mr. Taylor, welcome to Bloomberg News.
Thank you.
Give us your sense of the president's modification. Does the voluntary aspect of it cause you some concerns?
Less so now, since the guidelines came out today, because it's very clear that the incentives for services for all the players involved make this program look like something that it could really work. I think the market's response, I think there is some reason to be optimistic here, that we may be finally seeing some meat on the bone from President Obama's program, because it really is two separate things. One is Fannie and Freddie will take its loans that it has, and it will refinance those, and so it will stabilize a lot of people there who otherwise might have problems. And then the second part is working with investors, the services who manage those loans, and the homeowner and the government, create a product, a mortgage product that really works better for the homeowner, that really meets their ability to pay, which is what they should have gotten in the first place. So,
Mr. Taylor, I'm sorry, but that voluntary aspect, it doesn't compel mortgage servicers to modify loans. What might you suggest instead?
Well, we would have liked to have seen a buy-down program. That is, to just go and purchase these loans and then instruct services to modify. But I think that the government is putting enough sweeteners in this that the services are really going to be incented to really participate in this program. And if they do sign up for it, they can't cherry pick and cream the crop of these loans. They're going to have to modify all the loans that qualify. So, and we're hearing a lot of interest from services of participating in this program. So I'm more optimistic than I was. I'm sorry, I can't give you more criticism, it sounds like. But look,
you are getting a sense that the services are optimistic as well.
Optimistic, no, but willing to participate, yes. I think we ought to be optimistic, because I think this is going to create the floor in the foreclosure crisis and really begin to turn the corner on this problem, and property values that are people who don't have high-cost predatory loans, they're going to start to rise, and that's good for the economy.
That's interesting you mentioned seeing the floor of this, because a lot of people are wondering, when exactly are we going to see that? You think that this could be the impetus where we might see some light at the end of the tunnel here?
Yes. I mean, between the Fannie and Freddie part of the program and then the private sector working with the services and the borrower and the government, we're looking at, 6, 7, maybe 8 million homeowners who would be eligible, and that's a tremendous chunk out of what we're looking at in terms of the problematic loans that are facing us right now. So it really has the mechanism in place and the opportunity to have a wide-scale impact on the foreclosure crisis.
Mr. Taylor, tell me about the homeowners that you represent.
Yeah. Well, I represent community organizations and churches and some local governments, anybody who's basically trying to assist people to get fair access to credit and capital, fair being non-predatory, non-usurious kind of credit. So we've been very much deep in this problem since, people are very quick to try to blame the borrowers. The truth of the matter is, what really changed here is a segment of the lending industry, not most lenders, but a segment, were able to offer loans that traditional financial institutions would never have done. They just weren't safe and sound. They didn't consider the borrower's ability to pay beyond a few years. They engaged in practices and in making loans that just wouldn't have occurred in recent history.
Mr. Taylor, we have about a minute left. One thing that I've been hearing a lot from people is we talk about mortgages, we're talking about trying to keep people in their homes, but we haven't been hearing a lot about people who rent. Why not?
Well, actually, that is very much on the radar screen and very much in the president's plans and in Congress's plans to assist people, because I think, like in California, about 20% of the people impacted by these foreclosures are renters. So that's a significant amount of people. And many of them, most of them, are current on their rent. They haven't had anything to do with the foreclosure problem. They didn't take out the loan. They weren't the lender. They weren't the broker. They simply were the tenant. So there's initiatives underway, and I think right-headed initiatives to try to allow those people to continue to pay their rent and continue to, at least for the term of their lease, to be able to help pay those mortgages. And that makes a lot of sense.
And Mr. Taylor, I'm sorry, but we're going to have to leave it there. I wish we had more time. Hopefully we can have you back soon. Thank you. John Taylor, president of the National Community Reinvestment Coalition. And that wraps up this hour of Bloomberg News. I'm Mark Crumpton. Stay with us as we take you into the close. A full-fledged rally is underway this afternoon. The Dow Industrial's up 218 points, 3.2% at 69.44. S&P up 3 1/3% at 719.